What's up, guys? My name is Andre. I'm the CEO of edgeful.com, and I have James Bruce here, legendary trader, also a good friend of mine. I want to talk to him about trading, about how he uses Edgeful, about kind of his story. But James, we were just talking about, just before we started this, we were talking about the ups and downs of trading. I'd love to continue that conversation if you want to give some context on what we were talking about. Yeah, that would be great.
Sure. So yeah, obviously, welcome, guys. I am obviously part of the edgeful team as well, the South African department. um, but the head of African acquisitions.
Perfect.
But yeah, no, we were just talking off air about the ups and downs of trading, and it's we go through times, particularly as discretionary traders, where I feel like literally I can place a trade any day and it's going to be like a winning trade, and then it's like you're on the highs, and then like now recently, like the last 2 weeks, I would say, even month, I've just become a dad and it's been a lot more busy. And I used to watch a lot more pairs or asset classes. And I've actually just this weekend, I was like, I actually just can't do it anymore. So I've actually toned down my trading list to a lot less. And I just think that that's a topic in itself. Part of it is like just like less is more in trading. Maybe 2 to 3 tickers is the best. You don't need to go and find stock in play, and then you're trading one stock the one day and then the other stock the other day. It can be a little bit like that's just too much at times for me personally. I'd rather just not have a trading day and actually say, listen, I didn't have a trade that fit on my tickers today, but I'll come back tomorrow, instead of trying to just be like you're kind of running around like a headless chicken when you're trying to find a ticket to trade every single day. So basically my backstory is I was actually studying my Bachelor of Commerce degree in finance, which I miraculously passed thanks to my wife and best friend. And then I was also I was playing professional rugby at the same time for the Sharks in South Africa. And basically from there, I found one of my mates was trading currencies at the time. So obviously in South Africa, CFD brokers are massive. There's no futures trading in South Africa. So you can still trade the S&P or the NASDAQ just as a CFD contract. So it's basically the same thing, but and then I kind of got into it from there, and never looked back. I had my first 6-figure year 3 years later, after getting into trading, and then kind of it's been a lot of ups and a lot of downs, from that. But I think you kind of learn from it. You learn from the good and the bad. And Edgeful actually. You guys approached me. I remember approached me like, you got this tool that's going to help traders. And I was like, at that point in time, I was like, geez, I actually would love to start using some of like these like data points to actually help me make decisions trading. Like, for example, I had a thing in my, I still use it, a trading system where I use the previous day's highs and lows for areas of continuation or reversal. And that's obviously one of the reports Edgeful that uses, the previous day's range report. And then the opening candle continuation report, which we'll get to in a minute, I'm sure, but all that type of stuff. And I was like, this is really, really cool. And obviously here we are now.
Yeah. I mean, it's kind of crazy to think about, like started from a DM and now it was in November of 2023, I think.
Yeah, correct.
And now we've been working together for, I don't know how long. Yeah. And we actually had built a few reports for you too. I remember the Asian range breakout.
Correct. I still use that.
Yep. The Asian range breakout. I think the previous day's range was one that you had requested.
Yes.
And I know one of our users requested the opening candle continuation, but just so if you ever, kind of side note, you also had recently requested a trading view indicator, and we're working on it, just so you know. And that's to plot out the previous week's range. And so what I've noticed with you specifically is that you use a handful of reports. You just said recently, like a minute ago, that you don't want to be like a chicken with your head cut off.
Yeah.
You want to focus on what your kind of bread and butter is. And for any new trader, you have to play around with different things to figure out what that means for you. So for me, when I started trading, I was trading Tesla options. And then I switched over to SPY options. And then I started selling options. And then from selling options, well, I still do all of them. I just added like another piece to my like tool belt. And then I started trading futures. Like as the future space has gotten bigger and bigger, when I started trading in 2016, it was futures were non-existent. Yes, of course the institutions would trade commodities and futures, everything else, but retail traders never traded futures back then. And now I trade futures and I still trade options and I still sell options, but my focus is on a very core set of instruments. And for me, That is the SPY, the QQQ, the ES, and the NQ. And they're the same. I mean, they're pretty much the same. The ES and the SPY are the same. The QQQ and the NQ are the same. And one thing that you don't want to get this, pretty much I'm just adding to what James was saying, was you don't want to get a shiny object syndrome of like, oh, GameStop is in play now, or Bed Bath & Beyond is doing something, or Chewy is doing something. And now you start to trade something that you've never used before, you've never traded before. There is this huge catalyst where like you're not really sure what's going to happen. You're just kind of crossing your fingers and you're hoping to make money. That's not consistent. And I really like what you said about how you should focus on your core and then you want to eliminate everything else. And if your setups and what you like to trade doesn't set up that day, then there is no trade that day.
Yeah.
But like you said, you always look at a certain set of reports. And I'd love to know what are the reports that you look at every day?
Yeah, so I 100% agree with that. So my reports, and I'll say this on the edgeful pre-market streams, which I do Wednesday through to Friday, 8 a.m. Eastern time in edgeful's Discord and on the social. So for those listening, that's where you can watch me. You actually show these in real time, but
yeah,
we actually are getting a massive sell-off. So maybe I can also share like something that I was.
Share your screen.
I'm not in the trade because I need to kind of reset after yesterday. Yeah, so the edgeful report that I love to use every single day is the previous day's range report. Okay, so essentially what that, and we'll walk through this, but essentially what that is the previous day's highs and lows. If we take out the previous day's highs, I'm ideally looking for continuation plays. If we take out the previous day's lows, I'm ideally looking for continuation short plays, which we are getting today. I like using the overnight range. So that's what, not the market hours highs and lows, the overnight range market hours highs and lows.
Yeah.
That's one. So previous day's range report. The second one is that opening candle continuation report.
Yeah.
And essentially, if that is from not, particularly with stocks and indexes from not, and even DAX, you can use it on the DAX as well, DAX is one of my best tickers to trade, which is the German index, right? It just moves very, very nicely. From 9:30 a.m. to 10:30 a.m. Eastern time on the US markets, whatever that first hour does, we can have a probabilistic idea of what the rest of the day will or could possibly do.
Yeah.
Same as the DAX, that would be from 10 a.m. South African time or 3 a.m. Eastern time to 4 a.m. Eastern time. If that first hour was bearish, which it was today, we could look for some continued shorts, as well.
Yeah.
So that's my second report. And then, as mentioned, kind of like for my swing plays, which I do kind of like, it kind of gives my week I would say kind of like what I should be looking for from Wednesday through to Friday. It's the opening week range report. And this is similar to that initial balance report, which you can also go have a look at and we can maybe explain. But that opening week range report is after Monday and Tuesday, setting the highs and lows. If we take out one side, I will look to trade in that direction of that one side. So for example, after Monday and Tuesday sets a high and low and we take out the lows, I will look to maybe trade lower for the rest of the week. That could be the market profile for that week, essentially.
Yeah. Let me actually just pull that up here. I'm just going to organize my screens for a second. So just so everyone knows the reports as we go through them, I'll leave it on YM so you guys can go and look at it on whatever instruments you want. But the previous day's range report is one of them that we're talking about. And let me just refresh this quick. So the previous day's range report, what this does, as he mentioned, is it checks for every time the previous day's high is broken, how often does price close green or red today? Every time the previous day's low is broken, how often does price close green or red? So what's nice about this one is that it gives you your key levels every single day. So there is a previous day's high and low every single day. And when you reference those, you can say previous day's high is broken. That is obviously on YM at least very bullish. Previous day's low is broken. On YM, that is bearish. There is a likelihood that today is going to close red or green. This is how you can develop your bias for the day using and applying data to your trading. And what were the other two?
So it's the previous day's range report, the opening candle continuation report. The opening week range report is the other one that I like using.
So as he just mentioned, the opening candle continuation, if that first hour of the market session is green, then how often does the day close green? And what's really cool about this is you can look at it. So he mentioned the DAX. You can look at this on stocks, crypto, Forex, and futures on any instrument. And it's always just the first hour of the session. You can change your session for any like Asia or London traders. It'll just be the first hour from the 3 a.m. to 4 a.m. So
Correct.
that's right here. You can see this is the London session from 3 a.m. to 11 a.m. And that first hour is going to be from 3 to 4. So this is like completely customizable
Yes.
regardless of like where you are in the world. So yeah. And the previous weeks, what was that last one? The opening week range?
The opening week range report.
Yeah.
Yes, sir. Yep.
Opening.
That's the indicator that you're building for me, right?
Yes. Yep. Exactly. So on YM, I'll actually just pull up a chart example here.
Yeah.
The opening week range. So actually, you want to use last week as an example?
Yeah, let's use last week. We looked for lows for the rest of the week. Correct.
Yep. Okay. So pretty much what this previous does, as you can see here, we have the opening range set to Monday and Tuesday. So what this means is that this is the start, right here is the start of the week. And then right over here is the end of the week right here.
Yeah.
So what you want to do is take the high and low, the highest high and the lowest low made on Monday and Tuesday. And pretty much what you can see here is that, and I'll just break this out one more time.
Yep.
So this is the range that you're looking at. This is the box, the range.
From Monday to Tuesday, the highs and lows. Yep.
The combined highs and lows of Mondays and Tuesdays. Pretty much what you want to do is, and this obviously depends on the instrument you're looking at. Some will be very different. In this case, it's pretty split around broken previous day's high, broken previous day's low, and then broken both here. Pretty much the way that I actually would take away from this on YM specifically is that a single break, which is the combination of the blue and the black, is much more likely than a double break. So 70% of the time, price is only going to break out of one side of this opening week range. So in this case, obviously you can see right here, this is the Wednesday, Thursday, Friday. Price only breaks out to one side of this. So once it breaks, you can expect more continuation to the downside and capture this move over here. Is that the way that you use it? That's the way that I would use it.
Correct. That's how I use it as well. 100%. Yeah, that's how I use it too. As you can see, we got the break there, and then you look to maybe initiate a short with the stop at the high there. And then you could capture that move there. That is how I use it as well. And I think it gives you great context for the rest of the week. I'm always actually finding on my stats that later on in the week is always giving me better trades as well. I don't know, like Mondays and Tuesdays kind of set up, and then I kind of get into it like with my, from Tuesday onwards, essentially, or Wednesday onwards,
I'm really curious, actually. Do you ever look at this report, the volume and range by weekday?
I do, yes. And that it's not one that I always use, but I do know that it does get bigger by the week because I've looked at it, of course. Yeah.
Yeah. And something that a lot of people should understand is that we mentioned before, you want to have a bread and butter setup. You want to have the core instruments to look at. You want to have a small watch list that you can go and you can really learn about. Even if you trade one single ticker, whether it's ES or NQ or Tesla or SPY or the DAX, understanding how it behaves on different weekdays is extremely important. So James just mentioned that later in the week, his performance seems to be better than earlier in the week. And what do we notice here? That the volume and the range earlier in the week is a lot lower than later in the week. Like a very significant percentage difference from a Monday, Tuesday to a Friday, for example, is almost 90 on the YM specifically.
Yep.
There's almost 90,000 contracts traded versus 72,000 on Tuesday. Like percentage wise, that is a very significant difference of volume. And that's going to affect how price moves, how price action develops, and the sort of, or the quality of the trades that you can take. So understanding the environment that you're in is very important. If you know that you're in a low environment or a low volume environment, then maybe you want to use lighter size, you widen your stops and you bring your profit targets a little bit closer because you're more likely to be in a choppy price action or something that's more range bound. Whereas if there's higher volume and higher range, there's probably going to be more continuation. And these are the days where you can hold on to runners, you can set your profit targets further away, and you can start to capture these bigger moves, but you can't expect to capture a massive move on a day with low volume and low range. It's just not how it works.
Yeah, 100%.
Yeah.
So as mentioned, I think you should find a few reports. So I've mentioned a few, Andre's brought up a few as well. You should find a few reports that actually help you in your trading. But as I just want to go back to the topic that we were speaking about in the beginning. As I said, I had like a great January and then a little bit of a dry Feb. I can actually bring up my results here on screen. But a good January, and then just a more dried up February, which was, that stuff's going to happen, and I think in your trading that, a lot of outside factors are, I just became a dad in February as
Yeah.
well. So a lot more things. And I think something that I maybe fell victim to was I was trying to trade everything. I'm trying to trade Bitcoin, then I'm trying to trade YM, then I'm trying to trade whatever it is, and I think
Yeah.
that can be, I think it's the same thing with edgeful. You need to find a couple of reports that you work really, really well, and then work them. And if there's no trade that day, well, then there's no trade. You just move on to the next one. I think that's what I actually, when I'm trading at my best, I do really, really well. Like, I'm okay if there's no trade this day, I'll just come back the next day, and I'll work it from there. Maybe that's someone else's trade. This is not mine. But I can actually bring up, here's my
please.
So here was my February so far. So I'm actually down. This is on all my accounts, but down on February, 8K. Okay, so pretty poor. As said, I had my son on the 4th of Feb. But then if we go to January, so let's just go to Jan, and let's just go to like this. Okay, like that. I was up 11K. So obviously 2 contrasting months. Which obviously, this is going to happen in trading. I think many people that get into trading, they don't actually realize how different market environments. Maybe Nasdaq's moving well in January. It's maybe doing opposite for what I'm looking for in February and stuff like that. And I think that's why you just have to keep focused and not find this new shiny object symbol in essence. But again, as my favorite reports, you can see, you can actually bookmark them on the right-hand side of here. Okay. And you can find whichever ones that you would like. As I said, my ones that I do enjoy is that previous day's range report, the opening week range report, and then that opening candle continuation report. Those are the 3 ones that I really, really do enjoy using in my own trading. So
and one thing that I think also a lot of, just kind of to touch on what you had said about the different market environments, like the market environment, people think that they change over the course of 5 years. Like, there is a night and day difference, not only in the data from edgeful. Like, if you compare like Q3 of 2024 to now, it's completely different. But from everyone that I've spoken to, the markets are completely different since November. It's just not, it's just like, if you traded how you traded in September, it would not work now. It just wouldn't work now. And traders come in, a lot of new traders specifically will come into the markets, and they'll say, okay, this is working for me. It's going to work for me forever. And I wish that was the case. I wish it was that simple, but understanding, or like at least looking at the data, is going to be one of the best ways for you to adjust and adapt to these market environments, where you can physically see every day how the data is changing and how you can take advantage of it. And this has happened to me in December. I had a terrible month because I was so stubborn with the gap fill report. It was working so well. It was working so well for me in Q3 and going into Q4. And then it just stopped working. And in December, it just didn't work for me. I couldn't get it to work. And I just kept trying and trying and trying. And the data was showing that it's not working as much. But I was like, you know what? I just want to try it anyway. And that's where, as a trader, you have to go in and say, my emotions are hijacking the data, like mentally. So I'm starting to take poor quality trades. And then eventually, everyone will kind of like, you snap out of it. And then that's when you make the adjustment. Like, hopefully from the time, like, you want to shorten the time from when the markets change to when you make the change. Like, ideally it'll never be the same day, but you want to make it that time frame as small as possible so you can quickly adapt. But looking at the data, especially on like the 1 month, in my opinion, is a huge, huge plus.
Yeah. And I think this is just something also to speak about, is that I'm very grateful that I've got other ways of making money, because if I traded only full-time as my only source of income for 2 years, and it was very emotionally draining, to a point where actually I was extremely depressed, because during the good times, you don't know when the next bad month is going to come. And then, it can be very, very on edge the whole time. You were at Morgan Stanley, right? Or Goldman Sachs. Goldman Sachs, right? Even those guys that are managing big funds. Sorry, let's not get it wrong there. Goldman Sachs. What's that movie called?
Morgan Stanley was way below Goldman.
Okay, sorry. But what's that movie called? And they were like, they walk in. It's called The Boiler Room. Remember when they walk in and they're like, oh, you guys know we JT Marlin, we are JT, and they're like, oh, we're Goldman. That actually reminded me of yours. It was quite funny. I should have sent it to you. But like even those guys are getting salaries, and I think like on top of that, maybe their performance fees from it, so they have security. And I think something that is very interesting, and it still takes me some time, is that you shouldn't place obviously we here to make money trading. Of course, that's what we here to. Year on year, I would love to make money trading. There's going to be some times in the year that I'm not going to. That's a fact. I think something that's quite important for those listening is that you can't place your self-worth on your trading results, because if you do that, you're going to be you're going to be like a roller coaster. One day you're going to make money, you're going to think that you King Kong, and then the next day you're going to lose money and you're going to think that you don't deserve to be here. And you should be very, very self-aware of that. And I think that's something that at times is very tough, but it's something that I've had to learn as well. Like, just because I lost money this month doesn't mean I'm a shit person or shit husband or shit dad. So yeah,
I think that is one of the best pieces of advice that I've heard for trading. Like, you can't let your P&L dictate your mood. And I'll say that you'll never get to that point where you're like, oh yeah, I lost money, who cares, whatever, because of the uncertainty of what's going to happen next month or the month after. But yes, of course the questions come, but as a trader, you cannot. It's just it will make it so much harder if you're not actively focusing on, my P&L doesn't dictate my mood and doesn't dictate like who I am. Like, I took a bad trade, and if it was a good setup, that's great. Ideally, you want your losing trades to be on good setups, but there will be days where you go on tilt and you trade. You usually take like 1 to 3 trades, and then that day you take like 55 trades, like trying to like make your money back or whatever, and you end up losing more than like you would have if you initially took your first trade. Whatever. Trading is a lot about discipline, but it's also mentally, I would argue, one of the most difficult businesses to be in.
100%.
Mentally.
Yeah. You should. That's why you should have other ways of making money as well. And because, I mean, I agree 100%. It's the hardest way to make easy money. That's what trading is.
Yeah.
Because, you can make a couple of $1,000s in the space of, a trading session, and you're like, oh, this is so easy, I'm going to do this for the rest of the month. And then you get slapped around the next day. So I think you got to just use what you learned, and then make the bad times. This is what I've learned to my own trading, at least, is that when it's going well, appreciate it. Just take it one day at a time. Keep it simple. I think this is the most. You don't need to be the best technical analyst. You don't need to use every single edgeful report.
Correct.
Pick 2 to 3 good edgeful reports that make sense for you in the way that you trade. I've told you I like the previous day's range report, the opening candle continuation report, and then that opening week range report. That's like my bread and butter. Is it going to work every single time? Of course not. If it was, we'd all be millionaires. So that's it's not going to work every single time. But take from that, make it simple, and then just take it one day at a time. That's all I can really press. And then, as I said, like in the poor times, you got to make the poor times not as poor. Like you can see over there, I made 11K last month, and then this month I'm down 8K. Like it's still balanced. Like I'm still up. So if you can limit the downside, and that's something that's helped me a lot, is like a daily loss limit on my accounts, where like if I hit a certain point, okay, cool, I'm done for the day, I'm locked out, or like a max trade per day rule, because I know for me, as soon as I go on tilt, I start taking trades left, right, and then that never ends well. So just take it one day at a time, and don't jump, as you said, from different tickers, but also the same as edgeful. Don't jump to different reports every single day. And then you start using a report that you've never even heard of on the website, and then all of a sudden, because some guy in the Discord saying that he's made $100,000 from it, now all of a sudden you start to use it. So it doesn't work like that.
Yeah. That's the consolidating that your tool belt is really important. But and for me, at least, the expectations drive so much. So, and what I mean by that is, if you're a brand new trader and you expect to make money within the next 3 months, let's say you're ambitious, whatever, you want to make money in the next 3 months.
Sure.
When the 3 months comes up and you're not making money, Internally, you're going to start to stress and you're
Yeah.
going to start to force things because you're going to want to make money because you set this internal deadline or this expectation that you should be here by this time. And what happens is, even if you set your targets to be 1 year, what happens is when that year comes up, if you're not where you want to be, which is, it could be out of your control slightly because maybe you have things going on in your life, maybe the markets have changed, whatever it is. If you have this expectation and you are not there, trading is a very dangerous game to start to play psychologically in terms of like, next month I want to make $50,000. Let's just say,
Sure.
right? Let's just say next month I want to make 50K. You're at 45K profit on the month. You're like, I need to get to 50. I need to get to 50 because I said I'm going to get to 50. What
Yep.
I guarantee will happen 9 out of 10 times is you're going to end up less than that 45 that you started at.
Yeah.
It's just because trading is such a mental game on top of like number one foundation in trading. I would argue this to the day I die. You need to have data to trade. In my opinion, it's impossible to trade based on your gut. You cannot trade on your emotions. You need to have the foundation of the data. The trades that you're taking have to have the data on your side. Number two, the second layer that you add on top of that is not being a degenerate that's going to take every single trade in the world. That's not going to try to make money on every move. But that second layer, once you have the first layer, becomes so much easier because you have the confidence in the strategies and in the data to say, I know that this is going to set up the next day, or I know that this is going to set up next week. And I know what the probabilities are. So over the course of the next 3 months or the next 6 months, I can confidently stick to my winners because my profit targets are data backed. I can stick to my stop losses because my stop losses are data backed. And I can stick to my bias because I can use 3 or 4 reports or the what's in play to build my bias on the day to say, I have a very bullish bias. The MAG 7 are bullish. ES, NQ, SPY, QQQ are bullish. I can be bullish today if I want to trade any of those names.
Yeah.
So the psychological piece becomes so much easier when you have that first foundation of the data piece, which will help a new trader and an advanced trader.
Agreed. Yeah, I mean, it's you have to have the data to trade. I agree. You know, you can't just trade on your gut. It's yeah. I mean, it's obviously going to be a lot. It's going to be. It's like, can you trade without having anyone to teach you? Yes, you can. It's just going to take you a lot longer.
Yeah,
put it that way.
Yeah,
and a lot more maybe mentally tormenting.
Yeah, it's trading can be a beautiful thing for a lot of people if you can put in the time and the energy. Like you said, it's the hardest way to make easy money.
Yep.
And people see online, I think a lot of the reason that people get attracted to trading is because they see these crazy profits that people have online, which is fine. Like, that's totally fine because people do make a ton of money.
They do. This is, I think, sorry to butt in.
Please.
Traders can make a lot of money. I mean, I know someone down that lives 30 minutes away from me. He literally has made about $6 million in trading profits in his career, and that's spanned over like 15 years. I mean, it's not $1 million a year, but it's I mean, he's probably made more than that because he's got 6 million cash sitting in his bank account. So I mean, that, is that a successful career? Hey, to me that is. Like, but like, if I know some traders that will literally do north of $500,000, living, as I said, down the road from me in trading profits in the year. That's fantastic. I mean, that's going to probably, you can do what you want when you want, and you don't really have to answer to anyone because you're working from home. That doesn't mean that it's not going to be tough. He's got other ways of making money as well. He's got other ways of making money as well. He's the biggest trader I know personally, and legitimate trader. I've seen it with my own eyes, and he has about 7 different ways of making money. He runs his own brokerage firm. He does other things, deals with brokers, stuff like that. He's really, really a solid trader. But he's got different ways of making money. And I think that's just the thing is, like, I think just because you get into trading doesn't mean that it needs to be the only thing that you do. Yeah. But if you want to make a lot of money trading, I think you need to be following what these guys are doing, using data like edgeful to track your what trades you're taking, using journaling your trades and so forth. So
I definitely.
There's some commonalities that you do need to have, but we're not here for the doom and gloom. We just here to say that it is not as easy as everyone says it, or as it sometimes is portrayed.
Yeah, and one final piece just to add to that is it's not even like doom and gloom. Like we're
Yeah,
setting the right expectations because
correct. Yeah,
it takes a lot of work. Like you need to read a lot. You need to read about what trading is. You need to know the difference between what a market order is and a limit order is, and you need to know what slippage is and how much your commissions are. There is a lot of stuff that goes into it. Only the people who are willing to put in the work on how to learn how to do this, the people who are willing to go to the reports, the people that are willing to watch the videos, the people that are willing to watch to read the Stay Sharp newsletters, where we walk you through exactly how to take advantage of these reports, the people who are willing to journal their trades, those are the only people that are going to be successful. And that applies almost universally. Screw trading.
yeah.
That applies about anything. It's not.
Yeah.
It has nothing to do with trading specifically. It's about in general, like what is your work ethic like, and how is that going to translate into anything you do? If you're not willing to take the time to read or to learn or to practice or whatever else, then I mean, I hope that you do well, but it's unlikely. Like you need to take the actions that would make it unreasonable for you to be bad at this within 2 years. Like what do you need to start doing today for it to be unreasonable for you to be bad in 2 years?
Yeah, I think as you just said, I think it's like it's not doom and gloom, it's expectations. I think that trading, like, I mean, I've, as I mentioned, I've got my Bachelor of Commerce degree. I didn't get that degree in 6 months. It took me 4 years, So it's like anything in life. Like starting a business, not every business is going to be successful off the get-go. You don't start a business and all of a sudden you're raking in the profits. It definitely doesn't work like that. I mean, you'll know, Andre, like it takes time to build up, get a team around you, get people that you trust, get, whatever it is, payment processes, all that type of stuff to build up a business. The same as trading. Build up a strategy, okay, now you got the data, like edgeful. Okay, you got the trading journal. Okay, now you need the mindset. Oh shit, now you've got the trading, but now you actually need to follow the rules and everything like that. And that can sometimes take years on its own, to realize you stop making the same mistakes over and over in order to actually be successful. It's the easiest way. It's the hardest way to make easy money, but it's such a beautiful thing. And you got to take the good with the bad, right? And I think that's, for me, I think that's probably my strongest point as a trader, is not that I can read a chart or that I can, it's that I actually can be present, live in the moment, and I'm resilient. So I can knock it off, shake it off, come back, cool. I got my ass handed to me, and I'm okay with it. I put my P&L in the Discord every single day, and I take licks sometimes, and that you just move on to the next day. I think that's
how it goes. It's how it goes. I think that was a great way to end it. This was a great conversation. 100%. I think this is going to be, I hope that a lot of people get value from this, but if anyone has any questions for us, we have a free Discord on Edgeful, and you can actually access that within the app. On the right side, you're going to see the Discord icon. That's how you can join it. It's completely for free. You'll see the streams that James does every morning, and I hope this is helpful to you guys. James, I appreciate your time as always.
Always.
All right.
Yep.
Have a good one, guys.
Cheers, guys.